The information provided in this program is of a general nature and is not intended to be personalized financial advice. We encourage you to seek appropriate advice from a qualified professional to suit your individual circumstances. Bitcoin has a new surprising supporter. BlackRock's application for a Bitcoin ETF has pushed its price above $30,000, and this could be just the start.
I think the signaling is very strong for the market and kind of more validation that this market's not going anywhere.
The Fed's interest rate pause this month is being criticised as pointless. How much pain could higher rates for longer cause the US economy and company earnings?
There's plenty of potential, I think, for asset markets to be to have a big change in direction relative to what we've seen this year.
It's Friday, the 23rd of June, and you're watching Markets with Madison. The world's largest asset manager, BlackRock, has officially applied to the US Securities and Exchange Commission, seeking approval to launch a Bitcoin ETF on the NASDAQ called iShares Bitcoin Trust. And this week, a new cryptocurrency exchange called EDX Markets was launched, backed by major Wall Street firms Citadel, Fidelity, and Charles Schwab. Now, this is significant because investment institutions have largely avoided cryptocurrencies like Bitcoin until now. For example, here in New Zealand, there's only one investment firm that buys Bitcoin, called NZ Funds. Its chief investment officer was in London this week, so I had to go to Australia just to find someone to talk to me about the news this week. Benjamin Salamager is the CIO at Magnet Capital in Australia, which is 20 million in digital assets under management. Most of that is held in Bitcoin. Hey Ben, thanks for coming on the show.
Thank you so much for having me. It's a pleasure to be here.
How do you feel about potentially having to compete with BlackRock?
It's a daunting thing having BlackRock as your sparring partner in the space, but by the same merits, it's very complementary, and it's not too dissimilar to kind of our mission for the space and what we want for the space, which is just more access, more opportunity for people to get involved in a safe, secure manner. So BlackRock being who they are, they're one of the best to do it. So very welcome in the space.
It's been a pretty rough month, fair to say, for crypto and Bitcoin investors, with the SEC action against Binance and Coinbase coming out of the States. So how much of a surprise was it to you to see BlackRock launch an application for this potential ETF? And what kind of step change does this signal for institutional interest in the space?
Yeah, completely honestly, it blindsided me. Having BlackRock step in at the time that they did is something that I think probably caught most people by surprise. As you allude to, the SEC have been coming down quite hard with their allegations against Binance and Coinbase recently, so two of the biggest exchanges in the world for crypto assets. So for BlackRock, in the midst of all of that, to come out and announce their intentions to launch an ETF is staggering. BlackRock being who they are, they've launched hundreds of ETFs. I think I saw somewhere that their record for approvals is 575 to 1. So they're not coming at this lightly, and having them in the space will bring that level of institutionalization and sophistication that I think a lot of investors have been waiting for. So in terms of the kind of green light that it gives to those larger allocators, I think the signaling is very strong for the market and kind of more validation that this market's not going anywhere. And if anything, it's just going to become a bigger market over the coming years.
Yeah, on that, what do you think that this could do for the valuation of something like Bitcoin longer term, and also potentially the adoption of it in economies?
Yeah, so I think where Bitcoin's main value driver is its perception as a digital store of value. I think on that perception side of things, it really validates it having BlackRock behind it. And it's not just BlackRock. I mean, in last week as well, we've had Fidelity, Charles Schwab, and Citadel all announce their exchange EDX that launched over the last couple of days, providing Bitcoin, Ether, Litecoin, and Bitcoin Cash trading. So I think just having these kind of large financial institutional names behind crypto, again, just gives validation to that social perception of it as a digital store of value. And so I think that really allows a lot more people to get behind it. And when you're looking at an asset class with a fixed supply, of course, the more demand for it, just by supply demand dynamics, should hopefully lead to a few positive years ahead. That's not to say it's not without volatility, and what we have experienced in crypto historically, at least, is a very volatile asset class. So I think structurally it does change the game, but as to how that happens, we'll see it play out.
Let's talk about demand, Ben, because effectively, if it's approved, a Bitcoin spot price ETF would really open the floodgates for accessibility to exposure for something like Bitcoin, because currently if somebody wants to invest in it, they typically have to have a wallet and need to have cold storage. This would mean that investors in crypto wouldn't need to have that. So how much do you think that this could really broaden interest in Bitcoin? And if it is approved, and it does, what do you think existing Bitcoin investors like yourself would think about the demand that would create?
Yeah, I think it's undeniable that it would increase the demand. I think having the ability to buy Bitcoin through anyone's NASDAQ brokerage account really does, as you say, increase the ease of access, and you don't have to worry about doing KYC AML verification on crypto exchanges, or even getting your own wallet, or onboarding, or banking rails, which recently in Australia have become harder to send money to crypto exchanges. All of a sudden, you've got your very traditional, very institutional pipeline in order to be able to access Bitcoin and hold it in a portfolio. And so I think for not just retail investors, but for wealth managers and wealth allocators, where they can now allocate through their existing tools and not have to go outside what they've done for the last 5, 10, 20, 30 years, it really enables them to create an allocation within their portfolios for Bitcoin.
Now, there's already some similar products on the market. They're not exactly a spot price Bitcoin ETF, but there have been other firms make applications for those. There is something else that's like a future fund for Bitcoin. How would this BlackRock ETF, if approved, be different to what's currently out there?
Yeah, so in the US, there are a few futures Bitcoin ETFs and futures Ethereum ETFs as well. The mechanism for getting access through them is again not too dissimilar, but they don't actually acquire the underlying. They acquire essentially derivative exposure to the underlying. So in terms of that supply-demand dynamic, it really doesn't move the needle too much. It's a good indication of sentiment and willingness to purchase Bitcoin, but it's more kind of directional bet through accessing derivatives than it is through actually acquiring the spot. What you have with the spot Bitcoin ETF is, in order to actually issue shares, someone needs to acquire that Bitcoin and hold custody of that Bitcoin. In the case of BlackRock, they've announced Coinbase as their custodian. But someone will still have to buy that Bitcoin, take it off exchanges, off market, and put it in a custody wallet, which again just decreases the supply side liquidity via increasing demand. So when it comes to a spot Bitcoin ETF, it really has more, I guess, influence over the price of Bitcoin in the long term than a futures-based ETF.
Now, Ben, I don't know if you've read BlackRock's SEC application for this iShares Bitcoin Trust, but it came with a very long list of risks for investors, possibly actually the longest list I think I've ever seen in an SEC application. Given the risks and the regulatory landscape in the United States surrounding crypto exchanges, why do you think BlackRock is bothering? Do you think they're just seeing a slice of a pie and clearly they want to own everything in this world, so that's why they're getting in on it? Or is there another intention at play?
It's a very good question. I think, like I mentioned before, it did catch me a bit by surprise. I think it would have caught most. I think the expectation was not that they needed to do this by any means for their business. I think historically they have issued a spot trust to their private clients. In terms of the success of that, or how much Bitcoin that's attracted or investment that's attracted, I believe it's not public. So it's hard to indicate, but I believe in order for them to do so, there must have been several factors that went into the decision, such as incoming client demand and interest, as well as some kind of regulatory clarity on their side, because as I mentioned before, BlackRock don't do anything half-hearted, and I don't think they would have put an ETF filing in without having some kind of understanding that there is a chance of success here, where historically there might not have been a chance of success other crypto ETFs that have gone through the SEC application process.
Yeah, BlackRock must be pretty confident on this one because Grayscale has previously been denied a Bitcoin ETF from the SEC. So do you think the SEC is going to approve this one just because it's BlackRock?
There's a lot of question marks around that. I think lots of people are kind of pointing to the timing of this ETF filing, as we've discussed before, kind of being in the face of a lot of SEC increased activity in regards to the crypto space. The BlackRock do have a lot of political influence historically, and also just carry a big brand name behind them. So in terms of their success, I think the SEC would feel a lot more comfortable with a company like BlackRock than they would necessarily with a company like Grayscale or Gemini issuing an ETF. That's not to say it gets approved or anything. It still sits in the hands of the SEC as to how that will go. But BlackRock certainly have come at it with everything they can, including surveillance agreements, which no other previous ETF filing has ever included. So they certainly have kind of picked apart what's happened historically and why historical rejections have happened and tried to address that in their filing. So time will tell, but they're coming up against an SEC unit that has historically been very anti-approving a Bitcoin ETF.
Certainly. We'll wait and see. Thanks so much for your time and insights, Pete. Appreciate it.
No, very welcome, very welcome.
Now, on the day that charges were laid against the NASDAQ-listed crypto exchange Coinbase this month, Cathie Wood's investment firm Ark Invest bought 420,000 shares in it, worth $19 million US. I've spoken to Cathie on the show before, so I went back to her team asking why it's doubling down on Coinbase given the circumstances. Here's what they said. Despite the ongoing scrutiny, our conviction remains high in the long-term potential of crypto assets. Ark believes cryptocurrencies and smart contracts represent a large, growing market opportunity over the next 10 years. On the SEC allegations, they say there's not much new in them, but the progression of crypto legislation during this period will be critical to watch. Even the US Federal Reserve Chair, Jerome Powell, has added to the crypto debate. He was asked about it when he was presenting to Congress this week.
Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power.
Staying with the Fed, we all know it kept rates on hold this month and is signalling more may come. But markets don't seem to care that this could prolong pain for the US economy. Westpac's chief economist, Kelly Eckold, thinks the lack of reaction from investors is surprising. Hey, Kelly, thanks for coming on the show.
No worries. Thank you very much for inviting me.
It's only one pause. Why should we even be annoyed about it?
Well, I mean, it has increased a lot of uncertainty in investors' minds about actually what the Fed is going to do here in terms of its forward strategy. The markets had taken note of the fact that the Fed had indicated that they might like to pause this time, but there's been quite varied views about what the strategy is for interest rates from here, and that's of key importance when you're thinking about asset markets, equity markets going forward.
How weird is it for the Fed to pause if they are only signalling more to come?
It is a bit strange, and that's why I've tended to characterize it as a bit of the pointless pause. Where sometimes central banks might slow down the pace and perhaps pause and look at data between meetings because they're genuinely not sure about how much further they have to go, that they'd really like to gather some information to kind of like before they take that next move. But what was interesting here about what the Fed did last time is that they gave a lot of signals that suggest that they were actually quite sure that they had to do at least one more tightening and probably two. This kind of dot plot, which people might have read about, which basically just summarizes all of the individual members of the FOMC's forecast for where they think interest rates will end up at the end of the year, did have the majority suggesting two more rate hikes were going to be required. One of them even thought that interest rates might need to go over 6%. So given that, and given the fact that they revised up their growth and inflation forecasts for the current year and next year, it would really suggest that they do expect that they're going to have to do quite a bit more work. So hence pausing now kind of seemed a little bit pointless, because what are they going to learn in the next 6 weeks that would really change it that much?
Do you think, though, they could be bluffing? That actually maybe they wanted to pause, hypothetically, and just get a little bit more data, even though it is only 6 weeks, to then see if they actually do need to do more hikes?
Well, it's always possible. I guess my personal view, though, is that Jay Powell, the Fed chair, did indicate in some of his communications in the last couple of months that it would be nice if they didn't have to do a move every meeting, that they kind of reverted back to the kind of old style, kind of Bernanke style kind of monetary policy where it was slower, more measured, sort of like steady tightenings. And that's kind of consistent with this idea that he's done a lot of tightening already, and they increasingly worried that they might break something if they go too fast, too far. So, I think the interpretation might be more of a little bit of that, where he would like the market expectations to adjust away from thinking that it's either 25 or 50 basis points every meeting to more that it's 0 or 25 most meetings, basically, is how I see it. I think the idea that there's a bluff here is a bit inconsistent with where that dot plot kind of is for all of the committee members' projections. I think that if that was the case, we might see perhaps there would be one tightening in there and a really wide dispersion around that in terms of committee views. I don't think that's really what we see right now.
If they do follow through on that entire dot plot and possibly do hit over 6% for the Fed funds rate, what could they break? How much could this hurt both the US economy and also its company earnings, which have been to date pretty resilient?
Yeah, and so there's plenty of potential, I think, for asset markets to be to have a big change in direction relative to what we've seen this year. There's a lot of startling things about how this rate hike cycle has progressed in all countries, including and perhaps even especially the United States. The fact that there's been over 500 points of tightening and equity markets are actually up quite strongly in this latest year is not expected. You would actually be expecting that that these tightenings should be filtering through the top line of company valuations in terms of expected harder operating positions and weaker earnings growth. And also the discount rate on the bottom line is obviously going up by the 500 points and whatever's coming next. It is quite surprising that things have been doing so well in equities as they are. I think that is probably information that probably tells you something about the underlying resilience of businesses and the economy, and ultimately whether interest rates are really actually that high from an absolute perspective.
Defying all odds. We'll watch, worry, and wait. Thanks so much for your time, Kelly.
Very good. Thank you very much.
I want to know what you think of BlackRock's application for that Bitcoin ETF. If you're currently not a Bitcoin investor, would you look to buy into something like this? Or if you are a current Bitcoin investor, how would you feel about handing over some of that limited supply to an asset manager like BlackRock? Email in. In the meantime, go and put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald's show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.